The 4-year cycle, a macro reversal, the CPI data, the short-term price action. These are the things we're going to be discussing in today's video, so stay tuned to the end. Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning into today's video. I hope you're having a fantastic day. We're going to go ahead and take a look at Bitcoin today, obviously talking about the recent price action, the surge in price we've seen to $18,000, absolutely phenomenal to see, and of course a 4-year cycle, CPI, because CPI data is releasing in less than 24 hours, and of course the macro reversal, something everyone is been talking about and wants to know when that actually is taking place. So before we get into today's video, smash the like button, hit the comment button, subscribe to the channel if you are new here. Of course, you can find us on Telegram. Get a second link down below. You'll get access to all our charts, analysis, videos, information, news events, and a lot more stuff in here. If you're interested in VIP, you can contact me, find all the membership details here. You can also find our trading track record since February 2021. The VIP channel is here with 513 members. You can see trade signals, specific targets, entries, stop losses, everything you need. You can see we've had decent success, well, a lot of success actually this month already, with a lot of trades doing over 100%. You'll also get access to our group chat, which is over here with all of our members. Let's go ahead and dive into it for today's video, starting with the market data. So, pretty big day actually for Bitcoin, 2.73%. The largest singular green candle or green day we've seen the whole month. 2.73% is blowing out every other day of the month by a long shot, over 1.2% higher than our largest day, which was actually yesterday. For the quarter, we are currently up 10%. So this is obviously the month and the quarter being the first month of the year, up 10.3%, absolutely phenomenal. Again, some significant price action over here. Still a little bit to go before we get that macro reversal, but it is looking very, very good. We're seeing 24-hour volume up 39%, up to 71 billion. We're seeing 24-hour liquidations up 400%. A lot of people caught in some large shorts, unfortunately, as the price moved up. Volatility pumping to 1.36. Good to see volatility on the rise. And of course, like we said, $243 million in 24-hour liquidations, and most of that occurring within the last 4 hours on that rally up to 18,000. Absolutely insane, guys. Some massive volatility coming to the market, which again is great to see. With CPI around the corner, it is expected. So let's talk about the broader markets, then we'll talk about CPI, then we'll take a look at the short-term Bitcoin, then we'll take a look at the macro reversal, and finally finishing up on the 4-year cycle. Let's dive in. The DXY is continuously falling towards the downside, looking like a bearish structure on the very small time frame has actually developed over here, some sort of rising channel formation. Obviously not a good look over here for the DXY. It looks like the next target is going to be towards the downside of 1.1335. Of course, this is the next major horizontal support on the larger time frame for DXY again, a point of which we retested in May 2022, acting as a local bottom before we saw the next leg towards the upside. This is the area in which we can expect the price to retest if of course CPI comes out positive. We will see the DXY potentially tumble. So moving on to the stock market, the Dow Jones has pushed upwards through the bear flag formation. Absolutely insane strength over here, breaking our dotted line, of course. Not looking amazing, guys, until we break through this local high, remember. So at the moment, we are still in a downtrend. We're broken out of our short-term downtrending structure. So we're looking like we're trying to reverse from this small time downtrend, but we haven't had that macro reversal yet. Okay, we are looking for a break over 35,000 to see a continuation up to that 36,000 mark. Until then, this downtrend can definitely still continue. So we're not out of the woods yet. Same goes for the S&P 500. Everything's looking great. We're not out of the woods yet. We're still underneath the bear market resistance. This is our bear market. This is the rejection zone. This is our downtrending resistance. We're still sitting underneath it. So we're in this downtrend. We're broken up from our downtrend, continuing upwards. If we make a lower high here and reject, of course, we can see us continuing down to 3,600. Again, we do need to break over this local high here to see continuation upwards to retest our major rejection zone, which will result in a macro reversal or macro rejection. Moving on, our bond yields are looking awful. 10-year government bonds looking like they want to nuke, of course. And of course, the 2-year government bonds pushing into our lower support range. not looking very good, as we didn't actually make a high over here. We made a lower high, of course. We've created a nice little bottom over here, losing our 50 EMA, rejecting from our support zone. It looks like we are going to continue down towards our 4% zone if CPI comes out bad. So CPI, let's talk about that, and then we'll talk about Bitcoin, and of course let's talk about what we think. So we got our inflation rate year on year and core inflation year on year coming out pretty soon. It's 8:30 a.m. American time. I think it's -5 UTC time. So I'm not 100% sure what time that actually is in Australia, but as you can see, it's UTC -5 time, 8:30 a.m., which should be maybe around 10 p.m. I think it's about 8 hours away, a little bit over 8 hours away. I'm not 100% sure. Just double check when you're watching this video, check in UTC -5 time on the internet, and check out the conversion. I'll find out later. I think it's around 10 p.m. Australian time. Anyway, nevertheless, our consensus and forecast for the year on year, our consensus is 6.5, our forecast is 6.7, our previous is 7.1. As usual, guys, the lower the better. So if we're underneath consensus, guys, if we're underneath consensus, we're going to be very, very bullish. There's no doubt. We're going to be incredibly bullish. If we're between consensus and forecast, we're going to move based on the perceived systematic risk. Okay, so the higher the market rallies, the lower the risk return is for longs, the more likely we're going to see a pullback if we're between 6.5 and 6.7. And if we're over 6.7, of course, we're going to be bearish, okay? We're going to see a continuation towards the downside. This will be an overextension by the market, trying to price in positive data before that is released, and that is attributing to this rapid rally in price. So we are waiting to see what happens over here. As we already said, the price action leading up to CPI can get very sporadic. It's very important you take it with a grain of salt, as a lot can shift the price action when we get this data. We can see a lot of volatility and a lot of price direction shifts in a very short period of time, and these reversals that we are seeing can be completely destroyed, or they can continue at great strength. So be very careful moving into CPI. Don't have too large positions moving in. Let's talk about Bitcoin over here on the small time frame first, and then we'll get into the macro. So of course, guys, if you have been following along, you would know Bitcoin has been breaking through our horizontal zones with relative ease. It's been quite nice to see. We obviously had this downtrending resistance over here, okay, which we broke out of. We said if we break out of this downtrending resistance, we are in an uptrend. The uptrending targets are these gray boxes, gray box number 1, gray box number 2, and of course our upper target, $18,000. Every single target has been reached for the upside. Therefore, our upward move, our move towards the upside is actually complete. Now we're looking for rejections. Now we're looking for reversals for the downside, okay? Our upward move is complete. If you're entering longs here, you are entering late longs. Do not enter late longs. CPI is around the corner. The price is in a major resistance zone. There is absolutely no need to enter late longs until we get confirmation that this resistance is going to break and the macro reverse. And we're going to talk about the confirmations we need to see and what will constitute a confirmation of that in the video later on. So hang on for that. Until then, guys, we are in that rejection zone. We do, of course, have this macro downward trending resistance that we are looking for a potential rejection on. What I'd be looking for here, guys, is we do have obviously a large move towards the upside in the last few hours. If CPI comes out bad, I can potentially expect this move to basically be deleted. I can definitely see this move being deleted. We are in quite a low volume range over here. We bring up our VRPV, go to our 200 row size. What we can see is we really don't have much historical trading volume in this range, okay? So it's not going to take a lot of volatility, it's not going to take a lot of volume to shift the price action over here. We do have a lot of resistance over here. This is quite a high resistance range on the larger time frame. On the lower time frame, we don't have a lot of price action in this range. We can definitely move back towards the downside. I would not be opposed to seeing that happen. I think that is definitely a possibility. But again, like we've said before, we've seen a rapid rally up into this major resistance. We have to be potentially thinking about a macro reversal and what point will those take place. For devil's advocate, or for the sake of the downside, guys, if we do fall back down, we are looking for those exactly the same ranges we were looking for targets as targets once more. Okay, these are targets for the upside swing that are now going to be targets for downside swing once more. So looking for 17,400, 17,200, 17,600 to 17,800 at that POC level are going to be the short-term targets. On the very small time frame, let's move down to an hour chart. We can see we are incredibly oversold on the RSI. We do have a bearish divergence printing prior to this move upwards. Therefore, we do have some degree of weakening in the trend. The trend was definitely showing some glimmers of weakening before this rally occurred. Again, it proving or you could say, adding to the fact that this move could have been an overextension into resistance, a large liquidation into a resistance, which we do have the data to prove that with the liquidation data before we see an aggressive reversal. So remember, before we see aggressive reversals, we usually see aggressive liquidations. And these aggressive liquidations usually end up pushing the price into major resistance or support zones like we have seen. Looking at the price action over here, we've had a few neutral candles print very high up after large moves, again representing indecision. So this middle candle over here represents indecision. The price action is indecisive after a large move, which represents a weakening of the trend. We have a hammer candle printing over here, again representing a potential reversal. In the small time frame, we could definitely see a move back down to maybe this 50 EMA, which is going to be traveling upwards over here. That would most likely be the first target at around 17,800, and then our subsequent targets if that level breaks. Once again, if CPI comes out, all of this is going to go out the window. The price action is going to move sporadically based on the data. Like I said, above consensus or better than consensus, we're going to see positive. Above forecast or worse than forecast, we're going to see bearish downtrend for the markets, and of course that will not be very nice. So moving on to a macro reversal, guys. What are we looking for a macro reversal? Looking for an honest, reliable, and accurate exchange that you can trust to trade on. Go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. Something we've been talking about for a very long time. If you've been following the channel, congratulations. You're very much aware of what's happening here. If you are new to the channel today, obviously welcome to the channel. But we've been discussing this for quite some time. And by no surprise, we've been watching the objective data. If you've been looking at the charts from an objective standpoint for the last couple months, you would have noticed one really important thing, something that a lot of people overlooked. And that was, of course, the RSI was showing signs of a reversal, okay? It was showing us signs that bearish momentum was decreasing, okay? More importantly, we were coming up to retest a major diagonal resistance on the RSI, which could represent a significant shift. This is an important one, a shift in momentum. We saw the RSI break out a few days ago, and only today we've seen a rapid surge in price. As I said before, price moves after momentum shifts. I've been saying this for years now. When the momentum shifts positively, we generally see price action follow, as price action relies on momentum to move, okay? So this breakout occurred a few days ago, and that is why I said this was so significant, as it would increase the probability that we would see consecutive or our other validations, which are the 50 EMA break on the 2-day, okay, break and close, the downward diagonal resistance of the falling wedge break, and the POC level on the larger time frame of 19,200 break. It was an increased probability that we'll see all of those 4 things occur, which will then confirm the fact that we have reversed, okay? So it's a very good thing to see. That was our first thing. Number 2 was obviously the MACD. Again, not something I love to use. I really don't love using the MACD, but on the larger time frames, it is very telling. Very telling. What it tells us ever since, what was this one? The 2nd of July, we've been seeing the downtrend weakening. We've physically seen lower and lower and lower bearish volume coming to the market, lower bearish momentum, decreasing volatility, decreasing overall volume in the market ever since July 2nd. That has been continuously decreasing over the last few months. What does this represent? It represents a downward consolidation which is of course a bullish consolidation. It's a falling wedge structure. It's a bullish consolidation after a large move downwards, okay? Consolidation after large moves in a direction represents the current trend of which we are in is weakening. If the current trend weakens enough, it can reverse. And that is exactly what we are seeing here. So the question remains, at what point has the reversal occurred? At what point is the reversal in? And confirm that is exactly what we're answering over here. So it is quite simple to understand when structures reverse or when prices reverse. You have to look at structures. Technicals tell us what is likely to occur. Structures tell us is what will happen, okay? A structural break will tell us where the price action is going. A technical will tell us how strong that direction that the price action is going is. It will tell you the strength of that trend and the probability we're going to see a continuation or a reversal, okay? So, like we said already, point number one, weekly RSI break. We checked that off the list. We had point number one, weekly RSI break tick, okay? Next one is our little boxes, okay? Confirmations reversal. Next one, the 2-day, okay, 50 EMA break and close. So on the 2-day chart over here, the red line, the 50 EMA break, we've had the break, we haven't had the close yet. The close is in 21 hours. If we get that close, we'll have our second point of validation, okay? Until then, we're still in this downward trending resistance structure, this falling wedge, which is of course a downtrend. It's a bullish consolidation, but it's a downtrend, and therefore the trend can definitely continue towards the downside unless we break over and close above, okay? Point number three, like I just said, a break above the downward trending resistance of our falling wedge structure. We need a break and close above. That will be point number three. And finally, the most important point of all of them, which is the POC clear on the larger time frame for Bitcoin according to our VRPV, or a visible range volume profile. The POC is the point of control, and you can see it on the chart over here represented by this red line at 19,248. I'm going to go ahead and put this one in real quickly. 19,248. This is the point of largest resistance on the Bitcoin chart in history. The largest point of resistance in history, and therefore, how could we expect a macro reversal to occur unless we clear the largest point of reversal, which is directly above us, okay? Point number four is here. When we have ticks from all of these 4 points, the probability that a reversal will occur, should I say, and result in a sustained continuation to our upside massively increases. The downside probability drastically reduces, and that is the best time to enter if you want the lowest risk to most possible return. What we're looking at there is we're looking for a break upwards, a continuation into this next zone. Again, this is a trigger zone. It is a trigger zone according to December 2020. Okay, it is a zone of which will determine whether or not this reversal that we have developed out of this structure is going to continue or end up in a rejection back towards the downside. A continuation will take us to 30,000, which of course is the yearly bull market low. Remember that. 30,000 yearly bull market low. That is what we'll talk about when we talk about the 4-year cycle. So I do want you to remember that. The 30,000 yearly bull market low is going to be the validation for our entry into the next bull market, okay? So, macro reversal initiates. Trigger for whether we get a continuation of the macro reversal or rejection. And then trigger at 30,000 for whether or not this uptrend is going to develop into a bull market or not, okay? Those are the key levels we're looking at. So let's take a look at the 4-year cycle. In the 4-year cycle, guys, I've gone ahead and kneaded it up a bit with some zones so you can see what's happening. I think it's quite self-explanatory. Red, bear market, green, bull market, and gray is between bull markets and bear markets. Uptrend, it's an uptrend, but it's between bull and bear markets. Now, one thing I want to point out to you is this red line through the middle. You may be thinking, what is that red line? Ichimoku cloud. Okay, everything is taken off except the baseline. I think the baseline has been a phenomenal tool in prior cycles to predict the point of which we enter a uptrend, okay, in terms of the bull market. When does a bull market actually start? So what we're looking at over here is a 4-year cycle. We can see our first bear market, 13 bars, monthly chart, 13 months, okay, followed by 16 months, followed by 19 months of uptrend, bull market, okay? So 13-month bear market, 12-month bear market, 12-month bear market. Okay, Now, obviously the bear market has actually been longer than 12 months, it's been 14 months, but we're taking from absolute tops to absolute bottoms. So 12 months between absolute top and absolute bottom, not 12 months in length. Okay, it's been a 14-month bear market, but we're taking from tops to bottoms according to the 4-year cycle. Okay, next one, 16 months from the bottom to the point of which the price action closes a candle above the baseline on the RSI. And in my eyes, that is when the bull market triggers. Okay, the reason being is if we close a monthly candle above that point, we never ever close another monthly candle below that same line until we enter the bear market. You can see it. Okay, we break above, we never close a monthly candle until we break that line again, enter a bear market. Close above, never close a monthly candle, break that line over here, we enter a bear market. Right? Exactly the same thing has happened every single time. So we're looking at that level once more. From that break point, we've had 19 months of bear market. We've had 18 months of bear market. Okay, so the question is, bull market, when will the next bull market start? So according to our intermediary phases, or the intermediate phase, what do you want to call it? I don't know what you call it. The phase between the bear market and bull market, okay, we've seen 16 and 17 bars. So we're going to assume we're going to see 16 or 17 bars once more. That will take the bull market to April, which means the bull market is likely to start in April 2024. According to the 19 to 18 bar theory, the bull market is likely going to continue from April 2024 to October 2025. Okay, that is more likely going to be in the next phase. So bull market is likely to start April 2024, continue to October 2025, according to the 4-year cycle. Now, another really interesting fact is, once you make the bottom over here, the point of which the bull market can early, or the trigger point of which you can look for an entry, is of course that yearly low break. If you take a look and draw a horizontal line in at these prior yearly lows, you can see that once we close a monthly candle above these yearly low levels, we never do it again. We never close or drop below that level once more. You can see over here, we broke down from that yearly low, we closed above, we never ever came back below this level. This level was never retested. We never closed that monthly candle back below it. Same thing in 2018. We broke below, okay, bear market, pushed above, we never ever went back below for a monthly close below that level. Okay, so we're going to assume the safest point of entry, if you want the safest point, you're looking for a monthly candle over 30,000 or 28,000 according to this chart over here, the yearly low of the prior bull market. Okay, and again, going back to the Bitcoin chart, you can see where that level sits. It sits around this level. It's 28,000, okay, to 30,000 level. This chunk of support we had during this period of May to June, obviously June to July, and of course, I think that was January to February 2021. Okay, guys, I hope you found today's video very, very educational and beneficial. If you've got any questions, leave them down below. Let me know what you think about the 4-year cycle. Do you think the bottom is in? Because right now, the data is pointing towards a reversal. Of course, the reversal has not yet happened, and therefore we do have to wait, like I said, for our 4 points of confirmation to confirm it, but it is looking ever so likely. Of course, while we remain in this downtrend, the downtrend is very much active. The possibility that we continue towards the downside and retest these lows at 13.9k, 12,000 is still there, it is still a possibility. But even if we do that, this downtrend resistance is going to be active throughout the entirety of the next move down and will still be a key point of reversal when we look at the structures of the chart. Nevertheless, guys, if you've got any questions, leave them down below, and I'll see you guys in the next one. Cheers.